Brad, how do you follow Ananya? That's not easy.
Yeah, youth. I mean, that was nice. That was generous of Adam. I don't feel youthful, particularly following her. She's pretty amazing.
So I got to start off with the fact that you're wearing your banking tie and your banking suit, and you don't look like your cryptocurrency CEO.
I'm just gonna go back with where is your tie?
I don't. Yeah.
No, look.
I took it out because I didn't think you'd have one. I thought it was going to be over.
That happens to us, and kind of to answer your question, look, as Adam introduced, Ripple is a company selling software, selling technologies into banks, into financial institutions. And so we think about, we are selling into an audience that oftentimes is wearing a tie. Humorously, there are times when we show up for a meeting and we show up in ties and they're showing up to meet with us, so they wear casual Silicon Valley and we just miss each other on the other side.
So obviously this has been a huge week for news, and I speak not of Libra, although we'll get to that, but on Monday, right after the close, you did a massive deal with MoneyGram. That stock shot up 168% on the news. Ripple is private, so we don't know what happened inside your headquarters there. I assume there were some high fives. But XRP, which is the currency or the digital asset that you have this huge hoard of, just sort of barely moved.
Yep.
So what was the market saying there?
Well, look, I think, to be frank, there is a lot of hype, and to be crass, there's a lot of bullshit in the blockchain.
I begged him to be crass, by the way, in our pre-interview. Yeah.
I just think there's a lot of noise, and it's really, really, really hard, I think, for people looking at these ecosystems to understand what is real and what is noise. Mm-hmm. I mean, look, I'm sure we'll talk more about Facebook, but one of the headlines I read about that was, Facebook launches cryptocurrency.
Right.
That was on CNBC.
Right.
Facebook did not launch a cryptocurrency. Facebook wrote a white paper about their intent and their plans that maybe a year from now we'll see a cryptocurrency called Libra. So I think it's hard for the industry to separate what is real. I think the MoneyGram deal was a very big deal for Ripple. I think it was even a bigger deal for the crypto markets overall. Mm-hmm. If we go back in time, and as we've heard from other panelists, I do think the original use case for crypto, it was Silk Road.
Right.
Then about 2 years ago, it became about speculation.
Right.
And I think what we're seeing in 2019 and what we'll see going forward is there has to be utility. Right. There has to be a problem you're solving leveraging these technologies, or why? Why do they exist?
So in the sort of geological time scale, if you will, we have the era of scandal, then speculation, the scandal with Silk Road and Mt. Gox, and then speculative frenzy, and then winter, crypto winter. And so this next one you think is utility, but a lot of people are saying, well, what really is the utility here? Because you sort of poo-poo the idea of blockchains in general, sort of being used for food security and provenance and things like that.
I just think there's a lot of noise. Look, I think blockchains are an incredible evolution, and I think many parts of the internet, many parts of how transactions happen will change because of blockchains, period. Right. I think there are a lot of examples that I see people talk about where I ask myself, and I would ask people to ask themselves, why doesn't a database work better?
Right.
Why isn't a database more efficient? A blockchain is kind of an expensive database.
Right.
It's slower than many database technologies. And I think a lot of people, they use the word blockchain as, frankly, catnip for investors.
Right.
They want, or for marketing, that they want to get, consulting revenue, so they talk about blockchain. Look, we have tried to be very, very focused on solving a specific set of problems for a specific set of customers. And that is around transaction banking and liquidity management. So that today, as you've heard, cross-border transactions, they are slow, they are expensive, they are error-prone. And the one cost that I think gets overlooked that people don't fundamentally understand is the way correspondent banking works is pre-funded capital sits in accounts around the world. And you have literally $10 trillion pre-funded into other banks, into other financial institutions in order to facilitate. It's the oil in the engine that allows correspondent banking to work. And it's sitting there. And if we can reduce the amount of oil necessary in the engine, that's incredible efficiency for the global economy. That's good for everybody. If we can remove 10 trillion to a lower number, that's stock buybacks, that's dividends, that's working capital for lots of other purposes.
So this is key because, I mean, you really see the value in this or in many of the sort of digital assets that we talk about when we think about the sort of cryptocurrencies, but as the value is in transferring value rather than storing value, in facilitating transactions. And talk a little bit about the speed, because XRP versus, say, the way we do this now, why is it so much faster than the normal banking transfers through SWIFT, for example?
Well, so first let me say, I don't think there's going to be one crypto to rule them all. And I think there are cryptos. I own Bitcoin. I'm long Bitcoin. I think Bitcoin is a store of value and people hold it. And so I don't think there's just going to be one use case. We think about XRP as an incredibly efficient shuttler, a bridge currency, if you will, and because it's extremely fast.
Right.
So in contrast to even Bitcoin, for example, we can do a transaction for about 6/10,000th of a cent. A Bitcoin transaction today costs about $2.30 per transaction. Now, that doesn't mean Bitcoin's going to fail or something. I think Bitcoin and XRP, I don't view them as competitive.
Right.
XRP is extremely efficient for that payments solution, that payments problem we're solving. And Bitcoin's, I think, as a store of value, digital gold, as you heard from Barry Silbert up here yesterday. Today gold is worth many trillions of dollars, and Bitcoin's worth something around 200 billion.
So there are two protocols, two technologies that Ripple uses. One is that sells to banks, basically X-Current, which was the sort of fiat currency that uses this, uses a bridge currency essentially, but it uses fiat currency as the sort of bridge. The new one is X-Rapid, which uses XRP, and the MoneyGram deal is important because it really focuses on MoneyGram's going to use XRP. It's going to use this digital asset pretty
exactly
exclusively.
Right.
Is that exclusive or no?
It's not an exclusive deal, certainly. I mean, look, we already work with lots of other money service providers, like none as large as MoneyGram. We are doing some tests, as Hikmet from Western Union described yesterday.
Right.
We've done some tests with them. But look, we think fundamentally the entry point for us has been, let's go sell what we call X-Current. And this is a point-to-point, fiat-to-fiat, Bank of Cliff to the Bank of Brad.
You do not want to invest in the Bank of Cliff.
Real-time debit and credits.
Right.
So SWIFT today, there's a series of hops that things go through. It is slow, it is expensive, and this is real time, but it's fiat to fiat. It is necessary for that to work to have that pre-funded capital parked in the Bank of Cliff and the Bank of Brad. So it turns out you're right. I don't trust the Bank of Cliff. I don't want to store money there.
Well,
and so if I can use,
you have to say that.
What
all right.
What X-Rapid allows is for me to shuttle value in real time from, say, British pound to Philippine peso in real time. And I don't have to pre-fund into the Philippine peso.
So getting back to where we are in this moment of time in this sort of crypto geological time scale, the Libra deal, a lot of what we heard yesterday was that it's an inflection point, that this was a sort of, when you look at the players involved in it, it seemed to legitimize this idea, this sort of very big idea that's been around for a while. Your MoneyGram deal, where they're focusing on using this digital asset, XRP, is another sort of legitimizing idea. So what, are we at the point, because when I look at the banking clients that actually use XRP, actually that particular technology, the X-Rapid, they're not the household names yet.
Yeah, look, I do think the Facebook announcement, a whole bunch of examples, you're at a nascent stage of this industry, and you have, as we described earlier, you've gone from kind of, illicit use cases to speculation to utility. The X-Rapid product we've now had in market for about 8 months.
Right.
We've announced, somewhere between 10 and 15 production customers taking advantage of that product. For a Silicon Valley startup to be able to go from, a launch of a new product to 10 to 15 customers, actually, I'm pretty thrilled. But I think for a lot of banks that have a lot of liquidity parked around the world, they're evaluating, okay, what does that mean? I was talking to the CEO of one of the largest banks in Canada, and they were exiting their correspondent relationship in Brazil. Mm-hmm. It's expensive for them to hold Brazilian reals, and they're like, look, we don't have enough demand, so now we're going to use a correspondent bank. Now, if they could use X-Rapid into Brazil, they don't have to have the pre-funded money, they don't have the expense, and they can still solve their customers' problem that need to do business in Brazil. So I think these are all examples of, it is a journey. I think that it is nascent. I will also say that I'm going to send a case of champagne to David Marcus, the guy who runs the Libra. The reason is this week will probably be the best week of signed contracts at Ripple ever.
Right. Wow.
It has been a massive call to action because, you know, again, Facebook kind of came out and said, we don't need Western Union anymore.
Right.
Well, if you're a bank, if you're Western Union, you kind of, that's interesting. Right. And I think the banks realize that if Facebook is going to be a competitor in this space, they can't depend upon a technology like Swift to compete in the marketplace.
So I want to go to questions in just a second, so please think of them and hold up your hand and we'll get a paddle to you. But, you know, so the banking legitimacy question. So the Basel Commission just came out with a statement a couple of months ago, in which they talked about a lot of the risk inherent in these new cryptocurrencies, and it seemed like even though it was a milestone that they talked about it, the message itself was pretty skeptical. It seems to me.
My reaction to a lot of those statements is, you know, there are so many things lumped into one bucket when you talk about crypto.
Right.
Yesterday, you heard up here on stage, you know, some advocacy for tokens, crypto that is anonymous, that focuses on being anonymous.
Right.
I don't think that's helpful to the industry.
Right.
You know, we live in a world of governments. We live in a world of, you know, rules and regulations, and they matter. And one of the very important bedrock regulatory frameworks around banking is KYC, know your customer.
Right.
Anonymous transactions are not going to fly.
Right.
And so when I see some, you know, Basel Commission come out and say something broad about crypto generally, you're like, wait a minute.
Right.
Let's understand how XRP is used. Let's understand what Ripple is enabling. There are 0 transactions enabled by Ripple that aren't KYC'd.
So let's see if we have a question here. Anybody? Question? Well, so this brings up the question. Oh, do we have one? Oh yeah, right here.
Really a clarification. When you said, thank you. When you said that it was the best time, it was the best week for Ripple contracts ever, was that a factual statement or are you just hoping?
No, that's a factual statement.
That
We
the,
will
that the
probably-
Facebook announcement
has absolutely catalyzed contract activity. So we may have been talking to a bank, a payment provider for 6 weeks, 6 months about a contract. This has been a call to action. There's no question. I was texting with our head of sales, a guy named John Mitchell. He flies around the world more than anybody I've ever met. And this is going to be a record week for Ripple.
So to my understanding, the G20, the meeting of the global heads of states is in Osaka at the end of the month. To my understanding, the issues of digital assets are not on the agenda. What would you want them to address first if you had to do one quick topic for them?
Look, lack of regulatory clarity is definitely holding back the industry.
Right.
I think that I grew up in the kind of .com 1.0 era, and the fact that the U.S. government provided some frameworks for how they were looking at the internet then helped investment and helped clarity such that lots of companies could invest dollars there or whatever currency. I think the lack of that in the U.S., the lack of that in some markets around the world is holding things back. You don't see the U.S. leading here.
Right.
The U.K., Japan, Singapore, these are central banks and regulatory governments that they're being proactive and they're recognizing that not all crypto is the same.
Right.
And just because some enable anonymous transactions doesn't mean we should paint them all with one broad brush.
So regulatory compliance in a regulatory ambiguous world. Okay, thank you very much, Brad Garlinghouse. Thank you. That was great.